Okay, so I am Professor Joe O'Mahoney. I am a management consultant, an ex-management consultant, and I've been studying the consulting industry as an academic for the last 15 years. Now, what we're going to do today, we're going to run through some of the barriers that small consultancies encounter when they seek to grow. And we are going to look at how consultancies have overcome them. This is really reporting on an 18-month research project that I've had going on, which is looking at successful small consultancies and how they have grown. So what I've been doing is interviewing founders of successful consulting organizations. I'll talk more about that in a minute. Okay, so two things. One, I work at Cardiff University in the management school. I'm also the CEO and founder of Consulting Mastered. We've got a couple of our directors. Consulting Mastered helps small consultancies grow and helps consultants succeed. We've got a couple of the directors on the call. They might chip in to answer some questions later. We've got Simon, who is an expert in strategy consultancy, Simon Haslam, and also is an expert on consulting skills. And we've got Martin, who is also on the call, who is an expert especially in digital marketing for consulting firms. So we've kind of got a good gamut of skills there, and I hope to draw on those later when we answer some of your questions. Okay, let's just check that the chat is open. Yes, it seems to be. Okay, so if you've got any questions, put them in the chat. I will deal with them later. If I don't have a chance to deal with them, because we've got 75 people in the room now, if we don't get a chance to deal with all your questions, I've set up a Facebook group. So if you go to Facebook and type in Consulting Mastered Growth, or simply follow the link that I've got there, I thought it would be a great opportunity because there's so many of us interested in growing small consulting firms successfully. There's so little decent support out there. I thought it'd be useful to have a Facebook group where we could help each other discuss things, and also I could get back to many of you with the questions that I don't answer. So that's the link. The agenda, I've got the research bit that I would like to, just one slide. I've got the 5 barriers to growth and some solutions. I'll be talking quite fast. Apologies if that's an issue. You can always listen to the recording of this slower if you wish. And then I've also got the academic bit. I realise there's a few academics on the call who might be interested in that. But I won't blame you if you. It's only one slide, but I won't blame you if you disappear before that. Okay, so first of the research bit, it was quite embarrassing to me. You know, being a self-styled, I guess, expert in the management consulting industry, when a lot of my friends who I left in corporate consulting, they went up the ranks, bumped up against partner, and then left to start up their own firms, and then came to me a few years later, this was kind of in 2010, and said, okay, Joe, what's the best text to read if I want to grow my consulting firm, as opposed to simply start a consulting firm? And there's nothing out there. I mean, there still is nothing decent out there. And that's a big problem. There's 1 million small consultancies in North America and Western Europe, and you can probably double that for the rest of the world. There's lots of stories of how I did it. But as you know, how I did it doth butter no parsnips, because you can't generalize from a case of one, and contexts are very different. A lot of these, this is how I did it stories, were 10 or 20 years old sometimes, and are virtually no use now, especially as digital has completely transformed the consulting industry, especially over the last 10 years. So I started this research project. Well, I guess I've been helping small consultancies grow on an informal basis. Friends of mine for the last 10, 15 years. I started it as a formal research project 18 months ago. And I have been, this is the methodology, I've interviewed 50 founders who grew and sold their consulting firms within 15 years. I also, as a comparison, interviewed 30 consultancy founders that tried to do this and failed. The stats in terms of where they were when they sold, this is the successful ones. Typically you're talking at average margins of 20 to 30%, annual growth rates of 25%, time to sale, average 12 years, although my maximum there was 15 years. One consultancy did it in 5 years. Sale price typically around 10 million, but that's slightly skewed because the maximum is 350 million. Typically, once you get to the £5 million or $5 million mark, you can start looking. That's kind of the minimum level if you want to sell your firm. I realize that consultancy firms that sold is a very narrow benchmark of success, but we can discuss that another time. My analysis was around what do successful firms mostly do that unsuccessful firms mostly don't. And these are the, I'll go through the 5 things that stood out. There are more, but I've only got an hour to talk, so I want to focus. There will be a book coming out on this next year in April. And that is going to cover a lot of what I'm doing. Also, Consulting Mastered is going to be producing a course to take people through it in a coaching sense, if that's of any interest. And there's going to be a whole load of academic outputs that will probably come out about 20 years later. So we've got nearly 100 participants now. For those of you that have just joined, right at the beginning, I said, I'm not going to be able to get through all the questions. There's a Facebook group that I have created just for this. I kind of thought we could just support each other, be helpful to each other and share ideas. I'll be sharing bits of my book here as well. In fact, probably all of my book as I write it. So if you want to give me feedback, critical or otherwise, I'm more than happy to help. Okay, so I wanted to put this up because I'm really interested in getting from 0 to 5 million or 0 to 30 employees. It's not an exact science. What I'm not doing, there are some lessons that I'll be talking about here that do help consultancies go from 5 million to 50 million. But really, if you're talking about inflection points, the $5 million mark or 5 to 10 million is kind of crucial. It's when things change significantly. So I'm happy to take questions for those of you that have consultancies larger than this, but I'm primarily interested in those that typically might have 1 to 3 partners at the moment, might just be a solo consultancy. Looking beyond COVID, how do we grow? What do we do? How the hell do we get past this? I'm also happy to talk about COVID. I've got lots of research on that and the impact on the consulting industry, but I won't cover it in detail here. Okay, so barriers and solutions. Okay, the old chestnut is too few prospects. This is obviously, if you want to grow, consulting is a demand-led industry. You're not going to get anywhere if you don't have clients. Several things help. Number 1, quality thought leadership. A lot of people do what they call thought leadership, but very little of it is quality. What do I mean by quality? Number 1, it's unique, or at least relatively unique to that sector. Number 2, it's actionable. So it leads to the clients doing something. And number 3, there's a call to action at the end of it. If you want to know more, then contact this person or read our report or give me a ring. I'm happy to have a one-to-one. Number 2, narrow niche and wide funnel. We'll talk about niches in a minute. The internet seems to be obsessed with niches. And the key thing that I see, one of the major things that small consultancies fail on, if they have a nice offering, they have a reasonable conversion rate, but unless you've got a wide funnel that's getting in a lot of potential clients, i.e. moving people from cold to warm, then you're not going to be growing. Number 3, systematic use of LinkedIn. LinkedIn is a massive resource. You are probably on it. Probably only 20% of you are using it systematically. There is loads of good software that can help you with this, that can automate it. And as I will explain in a minute, you should have a digital architecture. And that sounds like a scary phrase, but it's not. If I can do it, any of you can do it. So that will support your use of LinkedIn. And this certainly doesn't mean subscribing to the LinkedIn Sales Navigator, but it does mean looking more strategically at how you use LinkedIn, especially with thought leadership. A structured approach to testimonials is something that virtually all the highly successful consultancies did. This doesn't mean just asking them to fill out a form when you do the project review, and I'm assuming you do the project review. It means getting the right testimonial, coaching them, and ideally getting a video that you can put on your website, and then using that testimonial to link to proposals that you put in. I realize I'm going through things quite quickly. I'm more than happy to go through things in a lot more detail when we get to questions. So this is one example of what I mean by a systematic use of a digital architecture. Lots of you will have websites, lots of you will have a LinkedIn page, and a few of you might use Twitter or Instagram or whatever. However, if these things are disparate, if these things do not link to your CRM system in an automated way, you're not keeping your warm clients or your potential warm clients warm. They'll be going from cold to warm, then to cold again, and in the meantime, somebody else will be going from warm to hot. So at the center of all of this is a decent CRM system through which you can automate emails and manage calls and manage the touch. And that includes not just the potential clients, your leads, but also the clients that you're working with at that moment. As you grow, you'll find your ability as a founder or CEO to keep in contact with all of the senior leads or senior project leaders is stretched. If you can automate some of that, if you can get your thought leadership out, if you can send them useful information that they can touch base with, it keeps you at the forefront of their mind. And all of you know that consultancy has got more and more competitive, and so you're not just trying to keep them happy, you're trying to draw a barrier. You're trying to get you in the forefront of the client's mind when they are making decisions about future work. So that's just one example. I'm not saying you need to do this, but you need to think systematically about this. Our expert on this is Martin, and he will be happy to answer questions on that later. Strong narrative and messaging. As somebody that has bought a lot of consultancy in the past, I and I'm sure many of you know that when you put out a request for information or request for proposal, you get 100 bids that look exactly the same. So having a strong narrative about what you offer uniquely and messaging that in terms of the value to the client is absolutely crucial. Most people think they do it, but with those consultancies that I coach, actually when you look at their messaging, they miss it. You get some very bright people, very often coming from large companies, the big four, who just haven't had to do this type of thing before. And so they've got a great mind, they've got a great services, but their messaging missed the mark. They don't frame it in terms of value to the client and the problem that they solve, and therefore they don't get anywhere with it. And that always surprises them. It may surprise some of you. Okay. I'm just going to pause for a second to make sure I can't see chat, and that bothers me a little bit. So I just want to make sure that there is a chat function going on. I'm not sure. Okay, let me have a look. I will make Martin a co-host, and he can look into that for me. Okay, so sorry about that, little interlude. Okay, second thing, too much competition. One of the big trends in consultancy over the last 20 years is that it has got incredibly competitive. And that was even before COVID happened. When I did a research project talking to the big consultancies about this, it said it was their #1 headache. There we go, we have chat, fantastic, good, thank you. Okay, too much competition, what do we do about this? #1, niche. And lots of people talk about niche, and this is really a stage of growth. Everybody on the internet seems to say, you need to find your niche, you need to find your niche. Now, if you focus on one niche, that's fine. That's how you build your base. But you need to grow beyond that eventually. So I've put together this tiny little graphic, and do excuse my indulgence here. But typically what you get when you start up, you're in the desperate phase, you do lots of different things, hence the different colors. As you gain more experience and as your services get better, and perhaps as you grow in confidence, the things that you do get fewer and fewer. So you're moving out of the desperation phase until you are doing one or two, perhaps, things very, very well. You're confident in them. Your marketing, value proposition, and messaging is entirely focused on that niche. This helps incredibly with your social media advertising, which if you haven't done, again, Martin's your man with this. And then from that base, you grow. I interviewed a highly successful consulting founder who ended up selling his firm for $350 million, I think, after 8 years. Now, he did get venture capital very early on, but it's quite remarkable. And he said, and I agree completely, you need to get small in order to grow. And this is what he meant, I believe. And so from this point, you grow. You move into aligned services or aligned markets. And this is really your period of growth. And don't get me wrong, you don't have to stick by this. But very often people have their niche and they have something on the side. I don't know if Deborah is here, but Deborah has always had called Chameleon Consulting, always had a brilliant core proposition around change and leadership and coaching, but on the side has got this fantastic product around wine tasting and personality testing. Fantastic. Look up Chameleon Consulting if you're interested. And she's always kept that on the side. So she's got her niche, but she's got this revenue generator as well. So you can get too obsessive with the niche, but you do need to grow out of it afterwards. And that's what successful consultancies do. Number 2, and I've talked about this just a second ago, building your unique value proposition. What do you do that nobody else does that allows you to provide value for the client? A lot of people think their value proposition is their services, and it is not. Your services support your value propositions. Your value propositions are the things that you do to solve client problems, and you explain it in that way. And many of your services might address one of those, or might address 2 of them, or might even address 3 of them, hence the diagram that I've created here. Unless you explain that to your client, I'm guessing most of you know this and are doing this, so I don't want to teach my grandmother to suck eggs. But again, lots of very able consultants get it wrong because, there's very little out them to help them do this. Continuous service improvement. Now, this is absolutely crucial in my view and hasn't really been talked about much in the literature. And in fact, the closest thing I can find on it is, total quality management 20 years ago. And this is the idea that you really compete in 2 markets as a consultant. You compete in the client market and you compete in the people market. So you want to get the best people for your firm and you want to get the best clients for your firm. Now, unless you are, you come to market with your services, fine. But eventually, even if you're the only consultant offering those services, people will imitate you. And the only thing that gives you advantage is your ability to continuously improve, is to capture the knowledge, improve it, and reflect that in higher delivery quality for your client. And that's not just an idea, that's a system that you need to implement that will allow you to improve the value of your services and therefore keep out the competition. I hope that makes sense. Happy to talk about it later. And that's absolutely crucial because by doing this, you are improving the value of your firm. You're improving the value of your firm to clients, and you're also improving the value of it to a potential buyer. And that's absolutely crucial. Barriers to entry. Now, all of us know that to be a consultant, at least in the vast majority of Western society, you just put your hand up and say, I'm a consultant. There are no compulsory qualifications, although that might change over the next couple of years. However, a lot of the very successful consultancies that I interviewed, the founders went out to create barriers to entry. In the words of one of the founders, who's highly successful, he said, "Why would you do change management or branding for an ice cream factory, ice cream organization, when anyone can tell you what a good brand or a bad brand or a good advert or a bad advert for an ice cream is?" They specialized in supply chain management for concrete manufacturers in the engineering sector. Now, that's a very specific niche, but they were worth 7 million off the back of that. And basically their argument was, we're going to make our target clients or our target market as difficult to understand as possible, so that we have as few competitors as possible. And so when you're choosing where your niche is going to be, or where you're thinking strategically about where you're going to move, think about who else can move into that space. It's not just what knowledge do you have that is valuable, but what knowledge do you have that is valuable that other people are going to find it hard to develop. And that also is an absolute key tick for buyers of consultancy firms, because when you think about your typical buyer, and they might be big and great in 3 markets, and then they think, well, who the hell can we buy to expand into this market? We've got all these great services, but we need some way of getting into this market or this set of services. If you have built that niche, it's going to allow you to do that. One option is to merge and buy. We can talk more about that in a second. One of the big regrets that the last question I ask all my interviewees is, what would you do? What would you do if you had your time again? What mistakes did you make? And a good third of them say the same thing, which is that they wish they had borrowed or got private equity or venture capital or whatever, or brought in a new partner earlier. Because that allows you to expand faster. Growing organically is fine. I would say that 80% of those that the successful interviewees, grew organically without debt. And they were quite proud of this, well, we didn't have debt. But in every other part of your life, or generally, you borrow to get a big house and then you pay it off over time, or you borrow to make an investment, and ideally the investment will pay off at a fast time. Now, debt is relatively cheap now at the moment, and there's a lot of venture capital out there. They're sitting, I read the other day, they're sitting on, I think it was $3.1 trillion of unspent money, simply because the economy's been in such a bad way for such a long time. So the trouble is, this can, it's a nice problem to have, but very often they don't want to invest less than 10 million because it's not worth their time. So you need to get to a certain size before you can get that money. But there's also other ways of getting funding in order to grow faster. Okay, so your prices are too low. Common problem. Now, this I find really frustrating, because on that internet, there are a lot of there's a lot of improbably young experts in the consulting industry who want to sell programs which are primarily online for several £1,000s that in effect show you how to do a funnel. And one of the things they say is, well, hey, put your prices up. And their big argument around this is people don't have the confidence to put their prices up. But anyone that's run a small consultancy knows that if you put your prices up, you're going to lose some of your clients. And any of you that go through procurement know that price, especially in the public sector, is going to be around 50% of the tender weighting when it comes to scoring the tenders. So it's not as simple as the 20-year-olds make out on the internet. So what do you do here? So number one is going back to what I said before around continuous service improvement. When I asked pretty much all the interviewees what their primary metric was, I was thinking they were going to talk around margins or revenues or revenue per project or utilization rates. None of them did. All of them said something around the quality of the service they provided and the delight of the customer. And I thought that was quite refreshing. And now I'm guessing that actually in small firms, this is quite common. But your ability to do that again goes back to this ability to continuously improve the services you're offering and the knowledge that you have and your team has that allows you to deliver those services. And so many consultants that I have spoken to and that have been unsuccessful think that, you know, getting a badged qualification is the same as improving quality. Sometimes it is, don't get me wrong, but a lot of it is around, you know, opening your mind, reading things, speaking to people, experimenting sometimes, then capturing that experiment, bringing the knowledge in-house and using it and sharing it in an effective way. This, of course, is the basis of leverage and utilization that I will speak about later. Number two, okay, everyone talks about relationship focused, and that's fine. But the key thing is it allows you to minimize procurement. I'm not going to talk about that in any detail. Dropping unqualified clients, for example, one of the interviewees said, well, we only deal with multinationals because this allows us to have a minimum project size, and also they seem less bothered about our prices, and that's especially true in the finance and banking sector. And again, when you're thinking about, you know, where your niche is and where you might want your niche to move, do think about the sectors. For those of you that have experience in different sectors, you'll know that different sectors pay a different amount, different amounts. Strategy services tend to get a premium. Anything in telco, banking, finance also gets a premium. And there are exceptions, of course. And by the way, you know, I'm not expecting everyone, you know, there is no consultancy that I interviewed that did all of these things. These are just common themes. So I hope you're not sitting there thinking, oh my God, well, I've got so much to do. All I'm trying to do with this, or all we are trying to do with this, is to give you some ideas, give you a view on what highly successful consultancies do, and really open the floor to discussion. I'm really hoping this Facebook group acts as a basis of discussion for some of these questions. And, you know, I can talk about each one of these points for hours. So I'm happy to do so in the questions and in the Facebook group. Okay, commodification and improvement of intellectual property. Now, when I talk to growing consultancies about intellectual property, they generally think that intellectual property means the services that they are developing, and that's true. But this diagram here shows this is buyers of consulting firms saying what forms of intellectual property are valuable to them. Now, obviously, most of them say, well, revenue generating intellectual property. But also they look at proprietary methods and tools. So how do you go about approaching a customer? What is your system for ending a project? What are your processes for managing your leadership team, for recruiting someone? Now, this is all intellectual property. I'm not saying that you can go out and then sell it in the same way that you would sell a patent, but it is valuable. And it's valuable for two reasons. Firstly, from a buyer's perspective, it allows them to have confidence that when you disappear as an owner, the organization will keep functioning because there are systems and processes and templates and methods in place to allow that to happen. But secondly, and more importantly, whether you want to sell or not, it allows you to get more junior staff. This is the basis of the leverage conversation. It allows you to get more junior staff, therefore cheaper staff, to do things that produce higher quality. If you systematize your services, if you systematize your methods, if you systematize your recruitment, this is absolutely crucial to allowing you to scale. Because obviously, as a founder, you know, you at the beginning, you get highly involved in all of these things. Eventually, you need to step back. But if you're going to step back, you need to make sure that the quality and the process and procedures are there, unless you want to be recruiting, you know, partners for the rest of your life, which you clearly don't because it's expensive. And sometimes they're a pain in the backside, yeah? Okay, so commodification and improvement of intellectual property. Okay, to leverage lower paid staff and to break the time revenue link. Yeah, I mean, this I think 2/3 of the interviewees, the successful interviewees, I also interviewed buyers, by the way, and I interviewed experts in the industry and many others, but I can talk more about that another time. 2/3 of them have services that have broken that time revenue link. So they're not selling their time for money. They have software, online training programs, videos, books, franchising, or whatever that allows them to make money while they sleep. And this, I realize, is the promise of the internet. This isn't suitable for every firm. But interestingly, when a lot of small consultancies will say to me, well, this isn't relevant to me because it doesn't work in my sector, or it doesn't work in my area of specialism. actually, when I push them, I'd say 2/3 of them say, oh, actually, I could do an online course about this, or I could, I could turn this into a small app, or I could create a set of templates that would provide value to the client without me having to be there and to explain. Or I could simply provide a template in a Word document and give them a short video on how to use it. Even if they're relatively small things, they add value to the client without you having to be there. And that's really crucial, because you'll know that your time as a founder, you're pulled between all these different things. A lot of the things that I'm talking about here, how do you prioritize? We'll talk more about that in a second. Okay, value pricing. I'm a little bit skeptical about this because everyone talks about value pricing, especially now. I don't know why it's gone through the roof. I think it's because Boston Consulting Group about 3 years ago said they were only going to do value pricing projects. So everyone on the internet said, oh my God, this is a really important thing to do. Now, obviously, you can't do value pricing with a lot of projects, and you shouldn't try to do value pricing with a lot of projects, and you shouldn't try and do value pricing with a client that you're relatively new to. All the experience, all the research says that value pricing works when you have a trusted relationship and you have win-win situations that work for both of you, and that comes with trust. However, within those caveats, if you know a client, if there is an opportunity that lends itself to value pricing, then by all means push it, because again, it's a fantastic way of leveraging large amounts of money. And you need to frame this conversation quite early on, in terms of when you're having the conversation with the client. You need to be talking about what value, if this is successful in 3 years' time, what will this have done with your company? What type of value are you looking? How can that be measured? So if you frame it early on, and some clients might just say, no, I want to pay for your time, or I want, I want the day rate or whatever. Ideally, you move away from that, but I do recognize that it's not always possible, and certainly not as easy as a lot of the stuff on the internet suggests. I don't want this to turn into a counseling session, but consultants are insecure overachievers anyway, generally. But there's nothing like looking on the internet and seeing some of this stuff and thinking, oh my God, I'm not doing that, and I haven't achieved that. And I want to reassure you in many ways, many of the firms that were successfully sold for, $5 to $20 million hadn't done most of these things. A real range. I spoke to, a group of incredibly bright, spotty IT geeks who did some management consultancy in artificial intelligence. They were in huge demand. They didn't have any processes and procedures. They really didn't have many management structures, but the buyer wanted them. So they sold very quickly on the basis of their expertise. I've spoken to, I don't want to go through the failings of the people that I interviewed, because they were very successful. But they didn't do a lot of the things that, they didn't do all of this stuff. And they certainly didn't do all the things that people on the internet say are absolutely crucial. And, the 5 simple mistakes that people are making. So have confidence in yourself. Have confidence in your vision, because it makes a lot of difference. By the way, I haven't done slides on mindset and leadership and strategy here. Because I'm focusing on the problem. There are implications in what I'm saying about mindset and skills and strategy and all the rest of it. But I didn't want to bombard you with too much. There are going to be chapters of this in the book, and I'll put them on the Facebook group. But I'm focusing here on the barriers to growth. I've spoken to some, I won't go any further on the weaknesses of those I interviewed, because they were incredibly kind to give me as much of their time as they did. Okay, costs. Yeah. Okay. So your operating costs as a consultant, as a growing firm, are primarily salary, of course. But there are things you can do to minimise your costs. Number one, I didn't interview a single successful firm that didn't turn into a partnership very quickly. I have found myself, having started 3 firms now, that getting able partners in very early that fit my values and fits the culture that I would like to develop, to be absolutely crucial. And it's not just because you have a leadership team that has different strengths, and I think Consulting Mastered is a very good example of this, but it's also because there's opportunity, there's economies of scale and economies of scope that can be achieved by having a partnership. Because all those back office systems, the cost can be shared, you know, and you come to better decisions when you bounce things off against people. And you know, I very often interviewed the whole partnership team at the successful firm, and you get very different people, and that was a strength, because it allows you to see things in different ways and make better decisions. So number one, having a partnership. And also, let's face it, consultancy is a really lonely profession. If you're a solo consultant at the moment, it's hard. If you've got someone to bounce ideas against, someone to moan to, and also someone to take over when you're feeling exhausted, it's absolutely crucial. Okay, effective leverage management. So this is for when you start to get a bit bigger, when you've got 10 to 15 to 20 staff. You will find that your organization, your leverage ratio in your organization, you will think should be this shape, and the types of projects that you need should be this shape. And by saying this shape, I mean a certain amount of senior people to a certain amount of junior people. But if you manage that badly, if the projects are this shaped, or your organization is this shaped and your projects are this shaped, then you're going to have low quality output because you're going to have too many junior staff. If your organization is this shape and your projects are this shape, you're going to have too many senior people, and therefore your costs are going to be a lot higher. So managing your projects well in terms of leverage and utilization is absolutely crucial. And that's partly, you know, hiring sensibly, but it's also being careful about how you craft the projects that you are designing with your clients. Again, happy to talk about that later. Outsource admin and back office. You can spend your life just doing social media. There's wonderful websites called Fiverr, Amazon Turk, things like that. When I was and am looking for potential clients, I source them through paying somebody on Fiverr to trawl LinkedIn, trawl the internet, find the targets that I want. Of course, I've got my own relationships on top of that. But there is so much. Once you start to think, I have these repetitive tasks, or even, you know, highly skilled tasks, you can pay somebody in the Philippines, you know, a quarter of what you would pay someone here, and they do a much better job, in my view. It takes a bit of hunting. Again, happy to talk more about that later. Replace associates with employees. Now, this is a touchy subject. The companies I interviewed went between 50-50 associates versus employees, to sort of 80-20 employees and associates. So that's 80% employees, 20% associates. Obviously, you need some associates so that when the economy shrinks or a big client drops you, you've got space to increase, or you've got space to decrease in size. However, firstly, associates are expensive, and secondly, they're very hard to embed in your culture. And I realize many of you will be part of an associate network, and that is crucial and important, and I would encourage you to do that. But as you grow, you need to think more strategically about your costs, where that knowledge asset is going. So remember, I talked about a continuous knowledge improvement or continuous service improvement. Where is that knowledge going? Is it going in outside your firm, or is it coming back inside your firm? And your ability to capture that is really important. And, you know, obviously being sensible in how you use associates as you grow. Now, obviously, you know, there's going to be a lot of highly skilled people out there who aren't going to want to come and work with you because they want, you know, they're ex-McKinsey, or they're making a lot of money as an associate, or whatever. Your ability to train people up, so get people in at a relatively low cost, get good graduates in, train them up in your processes and procedures that you will have created, allows you to take in relatively low paid people, train them up so that they're providing higher quality, and provide them with system processes and templates so that the quality is even higher. It may not be the same as having somebody that's got 20 years, but remember, you've got a long-term view here. If you're thinking of starting up and then selling your company, you should really be thinking about a minimum of 10 years. I will crack on. What's the time? How are we doing? Not bad. Okay, good. Okay. Early investment, I talked about that earlier. I won't talk about it now. I'm not saying that everyone should have early investment in order to grow, but certainly think about it strategically as a possibility. Don't think there is something to be proud of, especially in this day and age of, a lot of people said to me, well, I've never taken on any debt, or I never had to go into my overdraft or whatever. In order to grow successfully, you need to take risks. I found it absolutely heartbreaking when interviewing the unsuccessful consultancy, unsuccessful consultancies, i.e. those that wanted to grow and attempted it and failed, or grew a little bit and then collapsed back in on themselves. And a lot of it was down to their appetite for risk. You need to be a bit of a risk taker to be an entrepreneur, and you're not going to grow unless you have that entrepreneurial mindset. Now, you can develop that in terms of managing your attitudes to risk. And I'm not saying that, therefore you need to look for investment, but if the opportunity arises, if you are in a growth market, if you find a niche where demand vastly outstrips supply, then look for investment, because within 3 years other people will have moved in and taken that. I interviewed one small consultancy that got into the management side of cybersecurity and the strategy side of cybersecurity 20 years ago. And the guy was proud because he had a company of 20. Now, had he taken risks, he would have had a company of 400 and would have sold it a long time ago, would have been out of the earn-out period and would be on a yacht. And I don't mean that to denigrate him at all, because some people don't want to grow their consultancy, and that is absolutely fine. If it's a lifestyle choice, it's fine. If you don't like managing people, which I don't, that's fine. However, most of you are on this call because you want to grow your consultancy in some way. So I'm hoping that point takes root. Okay, failures to sustain growth. Now, a lot of the unsuccessful, and I use inverted commas with that because it's unsuccessful in a very specific way, consultancies did start to grow and then they collapsed. And they collapsed back in on themselves, or they ended up losing all the intellectual property and experience and then joining a client or going off to do something completely different. And very often they were happier because of that. However, there were common reasons for why growth wasn't sustainable. Number one, they failed to become the boss. That distinction between doing the work and leading the work are very different things. Thinking about your company strategically in terms of what systems and processes should I have, what's my vision, what's my strategy, what does my architecture look like, what does my business architecture look like, how are we measuring success? These are all things that the boss needs to do. Now, if you don't want to be the boss, it's not the end of the world. If you've got a set of partners, then you bring in a partner that wants to be the boss. One of the happiest consultants I met was somebody that had a very large company, but knew that she didn't want to be the boss. So she has focused on thought leadership and service development, and she's brought in a partner who is now the boss and manages it successfully. However, my point is that somebody needs to be the boss and to set time aside for doing the boss stuff. Number two, recruit slowly and right. Developing your culture, and this is my third point actually, developing your culture is absolutely crucial. And this was one of my big surprises in these interviews. Why would someone come and work for you when they could go and work for McKinsey? And you might say, well, I'm not interested in people that want to go and work for McKinsey. Well, you should be, because they're the brightest and most able and most ambitious, and they will do your company a lot of good. You don't want to be getting to the bottom of the barrel when it comes to recruitment. Now, all of these consultancies that grew had this problem. They all had the problem of, how do we recruit great people when we don't have a brand? And the answer to that is culture. If you can create a culture that is attractive and maintain a culture that allows people to feel empowered and part of a team and part of a family, then you will keep them, or at least you'll keep them for longer than you would have done otherwise. We're talking about consultants here. There's some of the most ambitious people, especially the younger ones. I spent years studying the Big Four, and one of my big findings is that the people in senior people in the Big Four are unhappy. And as soon as they get an offer that is credible, that is interesting, that pays them reasonably well, they will leave. Well, a lot of them will leave. Utilization rates have gone through the roof. Leverage ratios have gone through the roof. The amount of training that they get has declined massively over the last 10 years. The PwCs and Deloittes aren't the same as what they were even 10 years ago. They have quite, despite them winning lots of awards, those of you that have left these consultancies recently will probably know that a lot of them are developing what you might term toxic work cultures. So providing a solid alternative to that and building links with some of these people, telling your story, providing the narrative and creating the culture that attracts and keeps these people will allow you to attract the brightest and the best. And that is your asset. You know, as I said before, you're competing in two markets. When you grow, you're competing in the market for people, you're competing in the market for clients. Everyone, all the books, you know, I've got 60 books here on the consulting industry, all of them focus on the client. But your value that you can offer the client comes from, number one, your people, and number two, your ability to sustain and improve and capture your knowledge and produce better outcomes for the client. You can't do that without good people. So recruiting slowly and right is, I say slowly and right because you wouldn't believe the number of times I heard people say, when I asked them about their regrets, I heard people say, I really wish I hadn't recruited that person simply because I needed someone. And so recruiting slowly and getting the right people that fit the culture primarily is the number one thing, and then can do, you know, the job is the secondary thing. The exception to that is unless demand is vast. I spoke to 3 consultancies that literally, if you had a specialism in their area, which was usually something IT related, and had a pulse, they would hire you. And it allowed them to grow incredibly fast and incredibly profitably. But that was because they had a very rare skill set that buyers were happy to pay a premium for. Macy leadership team. By Macy, this is McKinsey's thing about mutually exclusive, collectively exhaustive. Don't recruit in your image. Recruit people that are different to you, have a different skill set. Don't recruit people that have different values to you or want a different culture to you or have a different end game to you. But do recruit people that have different skill sets to you. When I was setting up Consulting Masters, I'd known Simon for a long time. He had brilliant expertise at developing consulting skills, but also thinking about strategy and strategic consulting, something that I hadn't got a lot of experience in. And then, you know, one of my big embarrassments was on the digital architecture side. I understand it a lot better now simply because of the work that I've been doing. But then we met Martin, and Martin is, you know, he is the Jedi at this for consulting firms. And so finding people that complement your skill sets, but also you can discuss things with openly, is absolutely crucial. PSA, professional service automation. This has really moved on in the last 10 years. In fact, even 10 years ago, I don't think it existed. There are a lot, once you get to, you need to start thinking about this early. I'm not saying that you need professional service automation, you know, when you've got 10 people in the firm, but it's worth looking at the requirements of professional service automation software because they've done it hundreds of times. They know what works in professional service firms in terms of automating the back office, managing the proposal system, the sales system, and all of these things. And for, number one, it saves you a huge amount of work once you get, especially once you get to, you know, once you get to that tipping point of 20 to 30 people. It's a nightmare to manage that. You can't keep all the information in your head or on a couple of spreadsheets, which I'm sure many of you do at the moment. And certainly buyers don't want to see that. They want to see a systematized, backed up process where all these things link. So, you know, if you've got a big project coming in down the line, you might want to look at recruiting more people. And having those things link automatically rather than you having to remember them all the time is the advantage of professional service automation software. Anticipating inflection points. So if you look at the theory of consulting firm growth, it tends to come in S-curves. The most successful firms, they anticipated the challenges that were ahead of them and so pivoted in order to manage those challenges. That's one of the contributions I'll talk about later. And finally, diversifying your client base. Ideally, you don't want any one client to be more than 20% of your revenue. when COVID came along, I've been saying this for years, when COVID came along, it really reminded me of Warren Buffett's phrase, which is when the tide goes out, you see who has been skinny dipping. And so many, and this is very sad, so many of the great consultancies had been over dependent on one client or two clients, and when they disappeared, there was no firm left. And that is a situation, especially when you're growing, you have the ability to diversify and manage these risks and other risks that we can talk about. Okay, so that's that one slide on the academic bit. So if you look at the academic literature on small firm growth, they make several assumptions. Number one, S-curve growth is due to governance crises. Number two, HR is crucial to successful firm growth. This is an old Meister one. Number three, there are three types of consulting firms and they all do things differently. And number four, growth is driven by the need to keep people. Now, I have found that none of these were true of the consulting firms that I went into. That I've said before, they anticipated growth crises and governance crises. HR wasn't crucial. I'm not saying HR principles weren't crucial in terms of building a strong culture and managing people fairly. But even up to, if you look at Alexa, who have just, they decided not to sell. They floated on the stock market instead, raising around $100 million in revenue. They floated on the FTSE. So cool. So I've been quite close to Alexa, and so it's lovely seeing them grow and be so successful. There are loosely three archetypes of professional service firms, but these have slowly merged due to the internet technology and due to the different ways of commodifying knowledge. They've become a lot closer. And growth definitely is not driven by the need to keep people. This was Meister's idea, and I hate criticizing Meister because his work up until 2000 was absolutely fantastic. His argument was that if you've got bright, ambitious people, they want to go up in the organization. If they want to go up in the organization, you've got to grow the organization in order for them to go up. Now, utter nonsense. Clearly doesn't apply in any of the cases that I looked at. Growth was driven by mindset and strategy. In maybe 5 to 10%, people got to a certain point and thought, I could probably sell this. But 90% of cases, people said from the outset, I would really like to sell this or grow it to a certain point and then sell it. Okay, so I'll send you an email afterwards kind of summarizing this, providing a link to the offline recording. I realize there's probably another 100 people who want a link to the recording. This is the Facebook group that I've created that I think if you join it, we'll share ideas, I'll answer more of your questions and we can discuss things in private and everything, confidential, of course. Okay, so I've got time for questions. So what I'm going to do, I'm going to unmute Martin.
I'm here, I'm unmuted.
Hello, Martin. You've unmuted yourself. How are you, sir?
I have the power. I'm very well, thank you.
Okay, good. Now, do you have some questions that we need to address? Martin.
I do have some questions for
good
you.
Man, good man.
Yes, can you hear me?
Yes, can hear you.
Okay, cool. I'll work backwards so that it's clearer where we started from.
Okay.
And the first question I have is, do you have to build a business to sell, or can you have a successful lifestyle consulting business?
Okay, well, I'm happy for you to answer this, but I will give my own opinion first. Of course, you don't need to grow. A lot of the happiest people I know, in fact, a lot of the happiest people I know aren't in consulting, but a lot of the happiest consultants I know love doing what they're doing. They don't want to grow. They don't want to manage people. They don't want to bother with systems. And that's absolutely fine. However, in my view and my experience, some people think, well, if I'm going to be putting in this effort, why don't I create an asset at the end of the process so that I have the option to sell? So that's the number one thing, is that if I'm going to be doing the work anyway, why don't I at least have the option to sell down the line? The second thing is that if you are going to grow your consulting industry, a lot of the things that I'm talking about are simply good practice. You need good thought leadership. You need good intellectual property. You need good partners and to recruit well. You need to manage your systems and processes and to manage your teams and leverage and utilization and all the rest of it. So whether or not you want to sell at the end of the process is really a moot point. If you want to grow, you should at least be doing some of these things. Now, there are exceptions. There are some things that buyers want you to do. So in the last 2 or 3 years, they will want you to have less investment, show more profit margins, and a few other bits and pieces that I can talk about later. That I would not recommend for a company that was just simply operating and didn't want to sell. However, the vast majority of things buyers want to see, simply good practice if you've got a firm of, 10 to 50 people. Is that okay? Martin, have you got anything to add to that?
I think the only thing I would add to that is, despite what you may read in various books, etc., it is incredibly difficult to have a business of one person, because it's just not enough time in the day to do your operations, your marketing, your sales and delivery. And in order to make enough money, you can only really bank on selling, say, 40 to 50% max of your time. So I think at the opposite end of the scale, you've got to grow in some way. I'll move on to the next question, shall I?
Thank you.
Okay, so the question earlier was, do you think that a consultancy that hires a CEO who is not the founder has a greater chance of performing better than when the founder remains the CEO?
I have seen no evidence to indicate that that is the case. Once you get to once you get large, as in 50 to 100 to 250 people, then sometimes it makes sense to buy someone in from the outside. But I don't think I saw, certainly with the smaller firms up to 50 employees, I never saw anyone recruited in from the outside. And that's partly to do with the governance structures, because, they are the share owners. So if you want to bring someone in, you're obviously going to need to dilute your shareholding. But, it's contingent on the personal projects of the founders themselves. If you find yourself in a position where all of you want to leave, or none of you want to be CEO, then there's lots of good people out there who will want to do this, but they'll want a significant chunk of the equity, and they'll want a nice pay salary, because otherwise they could go and work. The type of quality of person that you're talking about is the type of person that could go and work for some of the big, well-branded firms.
Yeah, great, thank you. There was lots of conversation when we were talking about brand and culture, and the question was asked, does culture help in building brand, or is it the other way around? And there's various suggested answers, such as culture is what the employees say when decision makers are out of the room. It's rather pessimistic. And it is the final analysis that culture and brand are essentially the same thing, or are they different?
Okay, so interestingly, there's a lot of research on this, and the research shows that when brand is completely dislocated from the internal culture of the company, you get lower levels of performance. There's a whole series of survey-based research that has shown that to be the case. However, the two, in my view, are certainly not the same, but they are very strongly related. You can shift. You've seen a lot of consultancies in COVID and suffering from the COVID effects shift their brand, usually away from something fairly generic and value add around change management towards crisis management or scenario planning or something like that. And that's relatively easy to do. It is much more dangerous and much less easy to change the culture of a firm. Martin, you know much more about branding than I do. What are your thoughts on this?
I think that they have to be intertwined. And I think some of the firms that I worked at, the internal culture was very different to what we portrayed externally, and even internally within the sales team versus the delivery team, because they had a separate kind of sales force, the way that business was structured. And you'd often find that in sales, they would boast about the methodology that we apparently had, but in delivery, it was vaporware.
Yeah.
There was no such thing. So I think they are important. An excellent book on the topic of brand is called Brand, It Ain't the Logo by Ted Matthews. And that's really nice, where it talks about how brand is actually an element of everything you do. You know, it's not just that kind of thin veneer on the outside. Okay, I'll move on into question. There was one that I think I'll skip over, which is, are entrepreneurs born or grown? Because that's probably been done to death elsewhere.
It has.
What I did want to pick up on was around the leveraged pyramid. And David Meister talks about that a lot in Managed Professional Services firm. And we always had in the firm one of the firms I worked in, we had what we termed a barrel-shaped firm, which is where, or you could almost say a diamond-shaped, where we had a kind of 1 to 2 from a junior perspective. It sounds quite hard to work out how you grow, but that was the way that we did it. We just recruited in at a different level. But in terms of the firms that you interviewed, was there a common structure?
No.
Being either just a standard pyramid, or was it all?
No. So it entirely depends on the type of projects you're doing and the type of clients that you're serving. I mean, strategy firms tend to have very low leverage ratios, sort of 1 to 6. Even lower sometimes. 1 to 3. That is 1 partner for every 3 consultants. If you're going into a big commodified firm, it might be 1 to 20. Or 1 to 30, with the Accenture. So it entirely depends on the value that you provide and what type of company you are. Interestingly, and this is quite surprising, because Meister, as you know, his book primarily focuses on leverage as the absolute crucial strategic decision that you need to take. And that is true of the large firms. But large firms' leverage ratios are changing significantly. It also, even within one firm, it will shift from service and shift to sector, depending where you are. Interestingly, with the smaller firms, they weren't too bothered about, I guess they got more bothered about leverage the bigger they got. They were certainly less bothered about utilization rates. At a very small level, but they got more important as you got bigger. So basically, the closer you get to the sale, the more you need to show that you are managing your costs right, and that you're leveraging effectively. And leveraging effectively is the core is fundamental to high margins. You're not going to achieve high margins unless you're leveraging well. So in short answer, it's incredibly varied. It depends on the sector. But take your time working it out and what you feel comfortable with. Once you get to 50, once you get to 5 different service offerings, you'll probably find that each of those service offerings has a different utilization rate and a different leverage ratio.
Excellent, thank you. We've got 3 questions to go. And I'm going to sneak one in of my own, which is, where you were talking about systematizing service, one of the things that I've certainly witnessed over the years is consultants are incredibly proud of what they have achieved and the complexity in the thing that they do. So where at a firm level, you can recognize the need to systematize things, at the consultant level, I've seen a lot of resistance.
Yeah.
So did you come across anything like that in the research?
Yeah,
or,
go on.
I was going to say, or what guidance would you give in respect to how to start systematizing service?
So I guess once you get to the word service, you're framing it as something that is relatively systematized, relatively predictable, consistent quality, certainly from a client-facing perspective. But once you start to recruit people, and this really is one of the big shifts, one of those S-curves that I was talking about, is when you shift from having just partners, you might have 4 partners or 10 partners I've seen, all doing great work, all with 20, 30 years experience in their area. but they're spending all of their time crafting these, individual solutions for clients. They love in-depth problem solving, but they're not leveraging. They're just selling their time, and sometimes they're making good money doing this, but that won't take you past 10 people. Even McKinsey, everyone holds up McKinsey as providing, bespoke crafted solutions. It's absolutely not absolute nonsense. My students that go in there now are saying we are very much part of a machine. We get a bit more training than somebody at Accenture or IBM, but we're giving a manual in effect of how we do stuff. So making that shift from partners to then partners and employees is the first big shift that you face. And being an absolutely crucial point there is getting that partner's knowledge from their head into systems and processes. And there's relatively, or not relatively simple, but there's relatively simple steps for you to be able to do that. You want to build up a bank of cases, a bank of examples. You want to abstract the process so that you're not talking about specific clients, and you want to take the consultant through every step, and then you want to have that cycle of continuous improvement. And very often, you want to encourage a culture where your consultants say, this is too much information, this won't work in this case, we need to amend this process. But by building that system, it allows you to sell in people who are much more junior, don't have the experience, you're not paying them so much, but produce a more consistent and equally high quality outcome. And that's what clients want, because, gone are the days generally where clients are happy just to sign off on a big fat check because you show them a nice PowerPoint presentation.
Yeah, very much. So it's interesting when it comes to service, I think as people start to commoditize a firm and define services, one of the mistakes I often see is they start focusing their service on them and what they do, and how they're structured and their process, rather than the client and their problem, kind of working back from that point.
Yeah, good point.
Right, we might skip over that one, just conscious of time. We'll go to one of the first questions, which is about barriers to entry for consultants.
Sure.
And it was asked you, is there a management consulting certification, such as the CMC certificate, ICMCI? And somebody made the point that no qualifications are required. And while they've been IMC accredited for years, no client has ever been interested in it. And I would echo that myself, in terms of I have never been asked by a client what my certifications are. So from your perspective, how did that feature in the research, and how relevant is it?
Okay, so so Simon Haslam, who is our third director, who's an expert in consulting skills, he is very heavily involved with the International Council of Management Consulting Institutes, the Management Consulting Association, and the Chartered Management Institute. So Simon has won, or at least been one of the runners-up a few times in Best Consultant of the Year, which is quite a competitive prize that is given out every year by the Institute of Consulting, and he is a great believer in the Institute of Consulting and its umbrella body, which is the Institute of Management, or the Chartered Management Institute, the CMI, for those of you that are in the UK, but it's the AMCF if you're in America. My own experience echoes yours, Martin. But I do recognise that people have different experiences. So one of the most active members for the Chartered Management Institute, or the Institute of Consulting, is the strategy director at Accenture. I know him very well, and he very much believes consulting is a profession. We need to adhere to professional standards. We don't want to be tainted by the bad consultants out there, and my professionalization is very much part of this professional body that accredits people. However, my own experience is that being a member of the Chartered Management Institute or the Institute of Consulting, wherever you are in the world, won't add extra clients to you. And won't allow you to increase your prices. Now, there are other certifications that will allow you to do this, and it's worth looking and speaking to your clients about what other certifications they value. And as Simon, we had a conversation with Simon earlier, he's been asked to certify in a specific form of personality testing for one of his clients. And now that's an extra arrow to his, what's the phrase, his quiver to his arrow or something, an extra tool in the box. So there are things that will add value to you. In my experience, being a member of the professional association isn't one of those. However, that's not necessarily a reason not to join, because there is this professional ethos. You will meet interesting people who have the same challenges as you. I actually used to teach the Institute of Consulting qualifications, but I stopped doing it because I didn't think they provided the value to consultants that they should be getting. It's quite procedural and quite obvious, and a lot of this information you can get in books. So my experience is no. I do accept that other people think the answer is yes, though.
Marvelous, thank you. Yeah, I would just echo your thoughts there, which is it may not necessarily make a difference in terms of your likelihood of winning something, although perhaps to some degree, but perhaps not on increasing your fees. But actually the value is far more than simple fees and win in terms of being professional, networking, so on and so forth.
Sure. Yeah.
So that is it for the questions.
Great, thank you. If you have more questions or you think of questions, post them in the Facebook group. What I'll do, the questions that we didn't get to, I'll go through the chat, I'll put them in a document, and then I will probably paste them individually into the Facebook group so that everyone can see and contribute to the answers, because I am one of what was 101 participants, and a lot of you are going to know, in fact, all of you will know something much better than I or Martin or Simon do. So your input or discussion on the group would be appreciated, because we're all in this together at the moment. Okay, in the meantime, thank you so much for your time, and hope to see you on the other side in Facebook or in another chat. And for those of you that know me and have come along, it's lovely to see you. Take care. Bye-bye.